Now we're going to go into the National Association of Realtors existing home sales data for February. It's a very interesting picture that's getting painted for us as we look at how home sales have been going. So overall, we're going to look nationally and then we're going to zoom in. I'm here in northern New Jersey. That's my bread and butter. That's what I'm going to be most focused on. But let's take a look at the national level. Sales volume had a 4.2% increase from January to 4.26 million units sold. That's seasonally adjusted. So a lot of these numbers I'm sharing, again, they are seasonally adjusted. It takes into account the prior history of volume and activity when we get these numbers. The year-over-year comparison is down 1.2% nationally. From February of 2024, that number then was 4.31 million units sold seasonally adjusted. Now let's look at the breakdown by region. So here in the Northeast, sales fell 2%. That was month over month. But year over year, sales rose 4.2% to almost 500,000 seasonally adjusted. In the Midwest, it was flat month over month and up 1% year over year. That accounted for 1 million units of existing homes sold. In the South, they had the strongest volume. They were up 4.4% month over month, but down 4% year over year to 1.91 million units. In the West, we saw a large monthly gain that saw 13.3% improvement, and that's flat year over year. Let's contextualize this data a little bit. In the West, we have California. There were wildfires. There was a lot that was going on there. So when we're looking month over month, maybe the sales volume is ramping up a little bit for the things that were occurring over the past few months in that market. Now let's look at home prices. What is it costing us right now? So the national median price, that's looking at $398,400. Again, the median is not the average. It's the most commonly occurring number, which communicates the best example of what a typical home is going to cost. That reflects a 3.8% year-over-year price appreciation. That's 20 straight months now of year-over-year price appreciation, looking at the median home sales price. That is insane. Let's look at the Northeast in comparison now. $464,300 is the median home sales price in the Northeast region of the United States. That's a significant 10.4% price appreciation from a year ago. 10.4%. That means if you purchased in February of 2024, you can reasonably assume that your home value is somewhere in the neighborhood of 10% higher than when you purchased. This trend is continuing as long as inventory is tight. The equity implications here mean that even though you may have had a 6.5, or rather, if you purchased in February of 2024, you're probably sitting with an interest rate below 6.5. Rates did dip down in January of 2024. If you locked in and closed in February, you could be looking at something closer to 6%. What that translates to you right now for is quite a bit of home equity, and something to consider if you are in a position or you find yourself with a need to either consolidate debt or possibly do some updates to your property that you've lived in it for a year. Well, you're sitting on some home equity that you could possibly tap into. You could check out on my YouTube channel. I have a couple videos that talk about ways that you can keep your interest rate, which if you have 6.5 or lower, obviously from what we reported out is lower than where we're at right now for our 30-year fixed rate mortgage. So you may want to leverage a second loan program. I have a couple videos on my YouTube page. You can search for me, Peter D'Angelo, Mortgage Markets, and more. For more of that, there's a playlist there that is called Did You Know? And the Did You Know segments are all consolidated there for you to check out. There's one on home equity mortgages. There's one on home equity lines of credit, and then a comparison of the two so you can make an informed decision. Now let's talk about inventory and supply. So when we discuss this, we're discussing what is the current status of what is available to purchase. And right now, the total inventory is sitting at 1.24 million units available. That's up 5.1% month over month, and that's up 17% year over year. This is excellent news, by the way, because this is showing improvement in inventory, something that is much needed, particularly in the Northeast, but I think the whole country could benefit from this right now. The month's supply, this takes into account that figure, the 1.24 million units that are available, and we compare that to how does the industry churn for transactions and how long does it take for that inventory to be exhausted by home buyers. And that right now is holding steady at 3.5 months of supply. So that means that 1.24 million, the way that the market normally operates, usually will last 3.5 months in that neighborhood. That's up from 3 months in February of 2024. So looking at this with the rose-colored glasses in a way, we're seeing improvement year over year. The inventory, though, still remains tight. So when we look at historical standards for inventory, 3.5 months is very short. Normal, healthy markets like to see somewhere in the neighborhood of 6 months. That is anywhere between actually like 4.5 months to 6 months indicates a more healthy market. Once you go above supply levels of 6 months, now we're getting into buyer market territory where it's more advantageous to be a buyer in the real estate market than a seller. But right now, still a seller's market. We can just say it that simply. Let's look at the buyer trends. So let's explore who has been out there purchasing. So let's look at those first-time home buyers. They've been working so hard. It takes a lot of fortitude and determination in this market. So congratulations to you if you are part of this statistic. First-time home buyers increased to 31% of the total transactions for February. That's up from 28% in January and also up from 26% in February of 2024. So that's good improvement. That means first-time home buyers are getting to be more successful in this market. One of the issues, though, cash sales. I'm just going to look at first-time home buyers and cash sales. Those are the two that really move the needle in a big way. Now you're going to know why the first-time home buyers are a little bit more successful. Our cash sales for the month of February was 32% of the transactions. That's up month over month, but that's slightly down year over year. So even though it's up marginally compared to the recent history, that's showing that the people with cash are maybe coming back a little bit when we're looking at the year over year context. The spring market will be very important for us to understand if this is maybe a trend. And the less cash buyers there are out there, the more successful or the higher likelihood of success for the first-time home buyers and the move up or move down buyers and downsize buyers. Market outlook. Let's see how things are looking. And this is a synthesis of all of the feedback from National Association of Realtors, economists, and analysts. There is signs of recovery as mortgage rates are stabilizing a little bit. We got to think of it this way. Having 8 weeks of there not being some kind of crazy, tumultuous movement in mortgage rates, that's beneficial. I said it last year. I've said it for a while now. We don't necessarily need mortgage rates to go down significantly. I think that mortgage rates just need to stabilize so that people know the score. They can budget accordingly and manage accordingly. There won't be as much fallout on transactions. There won't be as many people doing this unfortunate tango of getting in the market and then rates go up and they have to get out of the market because now they're getting priced out. So if we can just have some stability, that will be hugely beneficial. That's one of the bright spots here. Other things to consider, the outlook still sees affordability as a constraint. So as long as mortgage rates are at the level that they are, if they're stable, we can know what we're managing, but it does not change the fact that home prices are continuing to appreciate at an incredible rate. Lastly, we have some regional dynamics to consider. We saw that looking at the South and the West, there was a lot more volume, and the Midwest saw some decline, and the Northeast still has these inventory struggles. So as long as that's the case, we're going to kind of have this status quo of a little bit of a, I'm just going to call it a challenging real estate market. I think that's the best way to put it. Deep diving into the Northeast now, The Northeast was the weakest nationally. Only 22,000 units sold in February, and that's a 48.8% drop. This is not a seasonally adjusted number. So looking at that, that's showing that the affordability constraints are now translating to lower volume. And also without there being enough inventory to satisfy supply. And I'm going to go as far as to say not enough quality inventory. These struggles will persist. And in the existing home sales, despite the month-over-month decline, the region saw a solid year-over-year increase. So there are some bright spots here to this reporting. I'm excited to see what March looks like. We're at the end of the month. I have seen quite a bit more volume and quite a bit more activity. Over the past month and a half, I've seen a lot more pre-approval activity. That normally translates into more activity for buyers in the market. So I'm very excited. So stay tuned for that at the end of April. I will be reporting out more on the National Association of Realtors when that next report gets furnished.